Woo! Welcome back, traders. We're going to be getting into NEO, AMC, and GameStop today, as well as the Fear and Greed Index. We're just going to refresh. We're going to see what it's at. Stock market officially in extreme fear, guys, and crypto getting absolutely annihilated, almost at the pinnacle of extreme fear, guys. So I've said it once. I'll say it again. When in doubt, zoom out. And then there's also another saying that I've said, a quote from Warren Buffett: when people are fearful, you should be greedy, guys. When people are greedy, you should be fearful. These are kind of the methods of our madness and why I'm still bullish right now, today, this current moment, right? We're going to be jumping into NEO stock first, and I wanted to cover where we're at in the stock. Now, you see a bunch of different lines that I have in the chart, and we talked about a couple different levels going into the end of the week. What's going to matter, right? I'm going to get rid of this blue squiggly line, and we're going to talk about where we are currently. Now, you have this very distributive look. We're not going to beat around the bush. It doesn't look great when you look at NEO stock, but I don't think anything looks great right now. You can see here you have this formed and established supportive trend line that you are now finding a base, kind of. Now you wicked off of it. You still closed with a bearish candlestick here. And what you're going to want to see is if this is where you're going to turn around on NEO. You need a green Friday. You just need a strong reaction candle. Now, whether that's a bullish hammer, I just wouldn't want to see this, like red doji that ends up being an inside bar and continues downwards to that 560 level. That is going to be our critical point of control on this stock. Now, when you zoom a little bit more closely into the stock, you see you left two gaps. On the daily time frame, ladies and gentlemen, you left one sitting at approximately 659 and then 711 that I believe you're going to come back and fill. Now, what's so important about your current location, while you did drop your all-time resistance trend line that we were hoping to find as support, bam, 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 you found a supportive bounce off of it one time here during your back test of this extension, and then you made a local top above 711 or 771, which was your crucial resistance to break here. You peaked your head above it and never got a weekly close above. So what's going to be crucial going into next week on NEO, and quite frankly, going into Friday, is as you see, if you see this continuation down to 560, we are going to be watching with an eagle eye, ladies and gentlemen. We are going to be watching what you do once you come down to this 560 level on the RSI. Because when you zoom out, we are in the daily time frame. And when you zoom out, you can see you are sitting right around that 36 level that has acted as support so many different times. But furthermore, if you drop all the way down to 30 on the RSI, guys, and you become oversold, things get very interesting because you're now oversold while being significantly higher in the stock price than you were the last time. You see, last time you were this oversold, guys, that was April. That was the tariff, sheriff sell-off. And you made a 45% run in 21 days, guys. That's insane. You look at the last time you were oversold. That was 2024 April. Kind of funny how that's similar. April seems to be a terrible month for NEO. That was a 60% run in 20 days, guys. So there seems to be a correlation here with being oversold or being close to. This is the closest you've been since. What did you make? You made a 56% run in 35 days. This was the other time you were oversold. You made a 20% in 11 days. So the moral of the story here, guys, is on NEO stock, the volume is drying up while you are rocketing down with extreme, furious momentum. Like, this is just a stupid move here. Down 18% in 7 days. And I know that the world feels, according to the Fear and Greed Index as well, the entire world feels like it is capitulating. But I am here to show you, based off of these indicators, not financial advice, that the world is not capitulating. In fact, you are just forming higher highs or higher lows on the perspective of the chart and on the perspective of the RSI. So the fact that you are still forming a base above 560 is what's going to matter, because once you get towards 560, guys, if you drop 560, I will have some serious concerns. But until that happens, just look at the support that you have at 560. Not only do you have your 50-day EMA on the weekly time frame, go to the daily. And what does the daily spell out? There's a reason I have a little box around this 50-day, and that is because you have this support trend, tap, tap, potential tap down here. You have 560, the golden horizontal trend, the only one that matters. And then you have your 200-day EMA, and right below that you have your gap fill. Your gap fill that you left back in August 20th. You left the gap fill at 514. Why is that significant? It is your only gap fill left to fill to the downside. So if you can then fill that gap and then reverse, right, to fill these two gaps, and then all the plethora of gaps that you have north, which is so many. It's actually ridiculous. They don't even show if I zoom in, because you left a gap here, which is significant at $10. You left a gap here at $14. You left a gap. Where is it? 27? Yeah, and I have another weird square circle thing. Leave it to me to be weird like that. You have a gap at $27, guys. So these gaps will act as a furious, in my opinion, snowball effect for this thing to continue to churn out good earnings, good revenue, good deliveries, and see this thing begin to pull off the impossible. And what I'm hoping for is this Carvana-esque recovery in which you continue to stair step until it becomes a boiling point and you see this amazing quarterly MACD cross green for the first time since 2021, guys. That is what we're waiting for, to see those fireworks begin to fire off, because the last time you got it, guys, you went from 177% in a quarter to 174, and then 129, and then a blow off top. So that is what we're waiting for. And I could not be more excited. I could not genuinely be more jacked. Meanwhile, the whole stock market is capitulating. I will say the one thing that does not look good, and that leads me to believe that you may see this flush down to 560, is this right here. You are about to curl down on the weekly MACD. It is one of my absolute favorites of all time technical indicators, is the MACD on the weekly time frame. If you get this curl down, which it looks like you're going to, I expect a little bit of downwards momentum. And the only thing that leads me to question this is the volume is so dry. Just look at this. Look at this downtrend. It is consistently dried up ever since you made your top back here in September. You blasted off with less volume, and that was your sign that you were not at the strength to overcome 771. So it's going to be interesting. Starting next week, I assume you're going to see the cross down. You need a reversal to eliminate that cross down. I'm trying to see if you've seen that before. You kind of saw it here. Selling pressure. You were going to cross down, and then bam, right into 771, and then rejected, and you got the cross down. It's another good example. Kind of, but not really. So that's our story on Neo stock. We are waiting to see what happens on Friday. It just does not look good on the short term as you have the 9-day EMA crossing below the 50. In my opinion, that almost always spells a directional move pretty sharply wherever it crosses. So if it crosses up, amazing, right? You saw a cross up here. As you were going into the 200, it smashed you through that and led to bullish momentum. Where did that cross? Crossed right here. You saw a 29% move in 9 days. So that is the short-term trend, in my opinion. That is your momentum, is the MACD and then these EMAs crossing back and forth, right? Flirting with each other. So it's going to be interesting to see what becomes of that if you do get this marked down into the 200-day EMA. One thing is for sure is I am buying if you go into the 200-day EMA. All right? Buy the fear, not financial advice. I think that's my technical analysis on NEO today. Let's get into GameStop. And then one more thing on AMC. Just one last time. If you get down here is the same time as you get to the 200-day EMA, guys, I will be screaming from the hills that this thing looks amazing. So something to watch. If you guys are just doing your own due diligence, if we become oversold, something to watch. All right. We'll cover AMC first. AMC looks terrible right now, making another all-time low, but slowly but surely, guys, inking into this weekly RSI uptrend, which potentially marks a bottom and or a buying opportunity, in my opinion. As you can see here, you are kind of running back the same exact playbook as what happened in 2021 as you make lower lows on the price in what looks like a very cumulative double bottom while making an RSI bullish divergent uptrend. 1, 2, 3. 1, 2, 3, 4. And what's so fascinating is you're not knifing, right? You are really grinding to a bottom here. And if you can see a nice bullish reaction as soon as you get this uptrend tapped on the RSI, I would anticipate a strong bounce, just like this one. And just like this one. In my opinion, not financial advice. That is your trigger to get back within this falling wedge and absolute 86 this thing in the other direction. So that's what we're watching for, and nothing's changed. That's all we have to see on AMC. We have to see this thing touch this uptrend and reverse, and that will significantly change my bias, and I hope you guys as well. If we see that reversion off of the bullish div, guys, things will begin to get apish, and that's all that there is to cover on AMC, really. Nothing more, nothing less. GameStop, still within this falling wedge. And things are going to get very, very interesting very, very quickly if you continue to spill over here as you come to the pinnacle of this falling wedge. It is, in my opinion, that you will see a reversion. Hopefully tomorrow. I'm hoping tomorrow's a green day for the market. But if it's not, caution yourself, right? Be careful and do your own due diligence. One thing that does get me absolutely jacked to the max is you are officially touching, as of today, into oversold territory. So the same thing I just said in NEO. The stock market is oversold to all get out. This is the first time you've touched since June, guys, of June. And what happened when you touched in June? Well, you saw a nice size launch and a wick of 13 to 14% in 19 days. This all spelled into a longer term move that eventually got knocked down by 28, which was your all-time POC in terms of volume, right? This is where the most volume is traded on the stock's history. It's $28, believe it or not. So what's the other time that you touched this? Now, you didn't touch it here, but you got dang close. And what happened, right? You came all the way down to 31 on the RSI. So we are now lower on the RSI than we were here. We did 38% in 13 days, guys. So these are the kind of reaction moves or reactive moves that we're expecting to see based off of these lows. And truthfully, guys, since June, you have not touched oversold. That is so mind-boggling to me on GameStop. But you go all the way back, guys, all the way back. You didn't even touch oversold when you were at 9, which is absurd. But you go all the way back here. And what happened back here, guys? GameStop does a very funny thing when you touch oversold. In fact, it goes freaking bananas. It goes insane. It goes ape you know what. No, it was back here. So, excuse me. It still did go ape you know what. Went up 20% in 5 days. So you had your reaction move and then your knife. And then you created this bullish div, right? 1, 2, 3, 4 taps of bullish div before you saw your 20% day on GME. And that's what we're going to be watching for. We're going to be watching for these same way we are for AMC. The bullish divergence is quite textbook a bullish reversal sign when you have the stock making a lower low, but the strength indicator of the stock is making a higher low. That spells funny business, right? The other time besides for here that you were in oversold, you would be right here. And what did you do? Boing, 33%, 60 days. God, I can't talk. 60% in 33 days, guys. So just take into perspective of where we are aligned with this falling wedge. Typically, every time you're this coiled, you get a nice size reaction. So what I'm watching for GameStop, and I've outlined it before, is this retest of the uptrend. If you break it, great. If you don't, you need to make an effort to break this. Retest. This gives you a shoulder, head, right shoulder, and then you see that breakout, right? And then you can go fill those gaps. Hopefully the market sentiment has changed by then, but one thing is for sure, it's pretty hard to get worse than the current market sentiment, especially in a bull market, especially near the all-time highs, guys. You look at IWM and nothing has changed. I said this in the last video, but it's hard for me to cover this and say, oh my God, we're going to zero. When you look at the IWM, you are consolidating on the previous all-time highs, guys. And on top of this neckline, now, even if you get a throwback to 230, guys, you're $6 away. I expect this thing to go absolutely parabolic. And you go to the 3-month, you're doing something that you have not done since, you guessed it, your last freaking run, guys. You look at 2008, and I know this is a funky comparison, but just stay with me here. And subscribe if you find value. That's the most important part. This was your RSI wedge or ascending triangle. Ascending triangle. You had a V shape and then a V shape. You have a V shape and then a V shape. But what's more important here is you had a horizontal resistance that you eventually broke, right? You kind of traded flat on top, broke, and you absolutely sprung like crazy. Now, when this had occurred in a short period of 2 years, you saw a 60% run in small cap stocks. Now, I do believe you're about to see the same thing on your small cap stocks. That's NEO, that's GameStop, that's AMC. That is your risk on assets basket, guys. They trade together because of the Russell 2000, typically. And I highlighted a bunch of different examples of this, guys. You see here your horizontal resistance, you spring 40%. You see your horizontal resistance, tap, tap, and then you spring 60%. You see here in the 2000.com bubble, your horizontal resistance, 1, 2, 3, 4, 5, and then you spring 76%. So this is quite literally the same playbook ran over and over and over and over and over. And that is what we're waiting for our risk on assets to go absolutely parabolic. Not financial advice, guys. I am not a financial advisor, but if you guys did find value, slap and punch and beat that like button and the subscribe button, guys, because we are so close to 1,000 subs. I can smell it. I will be back tomorrow, guys. But in the meantime, God bless. Thank you all for your individual contributions to get to this number. God bless, and I will see you in the next video. Peace. Woo! I just hit chest day. That hurt.